All right. It's magic. I think we're all live now. Hello, everyone. Can everyone hear me okay, I hope? All our panelists?
Yes.
Okay,
I can hear you, Judy.
Good, great. Well, I'm going to start in. We have a really interesting panel today, and I don't want to take time away from anybody else. First of all, by way of introduction, I'm Judy Rinkus. I'm founder and CEO of Seed to Sale Funding, and I'm going to be your friendly moderator today. I'm probably not going to say too much. I'm just going to lob questions off to the folks that are the best able to answer them. I do want to thank our sponsors for today, law firm Michael Best and Friedrichs, Verta Innovations, which is a free marketplace and delivery management company, the accountants MGO LLP, and great kudos to moderating that great panel earlier. We have the design build firm of Cannabis Facility Construction, and a shout out to Joe Donnelly. I think he's listening in today. Payroll recruiting and HR administration firm Illinois Equity Staffing, and of course my firm Seed to Sale Funding. We place debt capital for all aspects of the cannabis industry, and we can talk about how that works later if you want. So we do have a couple of things I want to remind you of. We have the Grown-In Learning pages, which will have links to some of the documents that are referenced throughout the day. grownin.com/summit-learning is the link to use for that. We are conducting a chat through the chat function. I know all of you have been very vocal in asking great questions up until now, and we're hoping to ask some more great questions. And Eric Davis is helping moderate, and he's going to chime in if I do something wrong. So that's basically the function of the next 45 minutes or so. So by way of quick introduction, I'm going to let them go into a little more detail in our first question. But we have Leah Bailey, who's the CEO of Bailey Consulting, Vishal Rungda, co-founder, president, and CFO. So he gets the award for being the busiest person because he has three jobs. Of C3 Industries, which is located, I believe, in Ann Arbor, Michigan. Greg Fidel, director of corporate development of PharmaCann, and I think most of us know very well the name PharmaCann, so that's wonderful. So by way of starting out, I'm going to just start in with our first question, but it will lead well into maybe all of our panelists covering their background. So this is how it was worded, and I love the wording, so I'm going to use it almost verbatim. Legal cannabis was not a thing when you all started your careers. I can certainly say it wasn't when I started. Can you please share how you applied your previous experience, BC, prior to cannabis, to the current cannabis industry? And that's a good way of introducing yourselves also to the audience. So I'm going to start with Leah. If you could take that one, and then we'll kind of round robin it after that.
Sounds good. And Judy, thank you for saying you're going to be a friendly moderator. I appreciated that a lot.
Yes, definitely.
Thank you. So it's nice to be here. Thank you so much to Grown-In for inviting me. And my background is consumer products, came up through the marketing side, was most recently, before I got into cannabis, the president of a division of Helen of Troy, about a $400 million division in beauty. So Revlon hair dryers and things like Sure deodorant and Pert Plus and all sorts of things that have nothing to do with cannabis, but have a lot to do with marketing and branding. And about 3 years ago, I got an opportunity to join a cannabis company as employee number 1, or I guess I like to say 0.5, because myself and the cultivator started at the same time. And I loved the opportunity to be able to grow something from the very beginning. And so in the last 2.5 to 3 years, I was the CEO of Flourish, which is a Michigan integrated cannabis manufacturer, processor, and dispensary company in south of Ann Arbor, so south of Michelle, in Adrian, Michigan. We have about 100,000 square feet of greenhouses. And we had the lovely experience of getting licensing in Grand Rapids, which was talked about in one of the earlier panels. So we had the first adult use, first of all, medical, and then adult use facility in Grand Rapids, both growing and also dispensary. So it was absolutely one of the most fun experiences I've ever had. And I think, do you want me to keep going then with the rest of the question, Judy, about why this is relevant?
Yeah, absolutely. And then we're just going to take it from there. Please do.
Okay,
about the
perfect.
hands.
And the reason I think that my background was very relevant to cannabis and I got really excited about it was because I brought both operations experience. I'd run divisions of companies and I also had branding experience. And I think that what was so similar to me was frankly not only just the smaller companies, and I was in a company that sold to a PE company, and so I had the opportunity to sell that through actually doing all of the work in terms of the presentations and the book with William Blair to sell it. But I also worked in telecom, and there was some discussion earlier on, I think, from Michael Gruber about how similar telecom was. And I went there when it was just deregulated to GTE as the VP of marketing. And it was exactly almost the same story because all of a sudden, people that didn't have to fight for consumers all of a sudden had to care about their brand. And of course, GTE became Verizon, which is a very strong brand. And so I think I got a really good start there. I also saw the beginning of the .com and the internet phase where people were just going out to get market share and didn't give a darn about cash flow or profitability and how dangerous that was and how you saw people go out of business so quickly like Quest. And so that also enforced for me how important it is to be able to have a cash flow positive, profitable business, which thankfully Flourish became. So I think both my branding background and my operation background helped me a lot as I came into cannabis.
Great, good. Vishal, why don't we go with you then next?
Yeah, sure. Thanks, Judy. Yeah, so I started my career actually as an investment banker in New York, and then I worked in private equity after that, and then I had a short stint at Google in business operations. And I think a lot of that experience has helped tremendously, particularly in the topic that we're talking about today, in raising capital and thinking through how to structure capital, how to launch a business and think about operations and profit margins and everything of that nature. So I think that kind of a finance and business background was particularly helpful in such a quickly evolving and fast-moving industry, and it is a capital-intensive industry, right? I think we all know launching these licenses and assets requires some capital and the ability to kind of convince investors that there's a story worth buying into. I will say, I think also prior to any of that experience, and just candidly, I've been a cannabis consumer my entire adult life, and I think that has also been a big part of our story. We do believe that having that kind of underlying product knowledge and knowledge of the consumer has been beneficial to us as we have been trying to launch brands and really focus on a kind of high quality product offering, and really understanding the culture of the cannabis industry, both where it came from and where it currently is. So, for us, I think that kind of combined experience was really helpful in kind of launching this platform. And I would actually touch on something Leah said too. I spent a lot of my time when I was a banker actually more in restructuring, and so helping companies that had kind of gone a little sideways. And that was really informative in also thinking about how you want to structure these things. What is the right amount of capital? How to think about overhead? How to think about how much cash you burn, right? And really taking almost a little bit more of a conservative approach, at least from our perspective. So all of that experience, I think, has kind of informed how we've approached the market and built the business to date.
Great, Vishal. How about Greg? You're next.
So I spent a decade similar to Vishal in the investment banking space, a little bit different. I was a sell-side analyst for a while doing investment research, primarily in the natural resources space. So I focused heavily on oil and gas and petrochemicals. And I think that experience helped out a lot because I think that industry is probably the most analogous to the cannabis space in terms of, from a supply chain perspective. And so having that experience is definitely helpful, not only understanding, what different types of companies there are along the supply chain, but just the evolution of an industry and where I think the cannabis industry is going. I think will end up something similar to that in large part. And then after that, I did a stint at a venture capital firm. And so understanding how to raise capital in an environment that is high growth and uncertain and in a risky environment was a helpful experience. I think that experience is kind of a perfect combination to go into the cannabis space. I didn't do that on purpose. I kind of backed into it when I started thinking about taking a job here. I didn't even know that cannabis was legal in Illinois. And so, but yeah, that's my background. And now I'm the director of corporate development for PharmaCann, doing capital raising and M&A activities.
Wonderful. Well, great. So we have a great panel. I'm going to dig into some of our questions a little bit further. I guess the first question, and we're going to direct this first to Vishal, and then we'll move around from there. Think about the first money in, if you will, when C3 was just getting started. Describe that process. How did you raise your first $1, $2 on from there? And how can that help our viewers here maybe crafting their own early stage strategies?
Sure. Yeah, it's a great question, Judy. I mean, I would say it is definitely, I remember it very well. It's a vastly different experience than raising capital at this point in our company's kind of history. I think the things that we focused on and that most people focus on at that really initial stage is you have to have a huge focus on the team, right? Who are the individuals? What is their respective experience? What are they bringing to the table? Because at that early stage, when it's really, a concept that needs to then kind of be fleshed out, it's all about, who are you backing, right? And so I think for us, we focused a lot on our own. I have two partners. We all focused on our respective backgrounds, how those were complementary, why we thought that we were a team that could compete and succeed in a fast evolving market. I think the other thing we focused a lot on was the market itself, and I don't necessarily just mean the broad-based U.S. cannabis industry, but what is the specific market you are going into? What are the dynamics within that market? How will you compete there? What are the trends? What's the size? These things I think help people get a sense of, one, the business plan has been fleshed out, and there is a plan and where you kind of fit into the broader landscape. And I think for us, given that so much of it is based on the individuals and is almost inherently personal at that startup kind of moment, we really leveraged our network. And so, we have in general really been backed, and we're quite proud of by a lot of folks that we have, existing relationships with, folks we've known since we were pretty young, or even some of our family members, but also professional relationships who have a sense of, who are we, what's our work ethic like, are we trustworthy, are we honest, those types of more qualitative attributes that I think really make a big difference in the beginning. And so, yeah, for us, it was really I guess I would say a pretty personal kind of group that we went to that backed us initially and really focused on their belief that we would be able to take this into something bigger than where we started.
Yeah, I completely agree with you. Primarily not primarily, but at least half of our clientele, I would say, is startup to early stage. And what I often tell them is, your best source of equity at that stage is really probably, call it friends and family, call it connections, call it influencers, however you want. And you probably know more people than you think you do. And so I couldn't agree with that more. And everyone really is really backing the team, and having a well-diversified team who have a variety of different backgrounds is just key, and especially in such a new industry where you can't rely on really any historical information to make any kind of decisions. So, Greg, what are your thoughts on this?
Yeah, no, I agree with Vishal, and then also understanding, I guess, the size of the opportunity as well. There's different types of investors that maybe want to have an interest in something that's local, or maybe want to only invest in something that has a lot of upside, similar to like a venture capital space. But yeah, I agree with what Vishal said.
Judy, can I actually touch on one other thing that you mentioned?
Oh, absolutely.
Yeah, you made a good point too of people not realizing sometimes how expansive their network may be, and what I would say on that is that I think part of it too is putting yourself out there, right? It's not if you've never done it before, it's not easy to go to people and ask for capital, particularly personal relationships, professional relationships. But I think if you believe in what you are doing in your business plan, those are some of the conversations you will have to have, right? You will need to go to a former colleague or former boss that you absolutely wouldn't want to just come to with something you don't believe in, but say, like, I think this is real, right? So I would say that thinking, I don't want to say creatively about your network, but really kind of evaluating your network and who can you speak to about what. And then to Greg's point, what do you know about that person? What are their interests? What are they seeking? Because you need to craft a story that matches up with the type of investor you are approaching.
I very much agree. It's all about personal relationships. It always is, but I think particularly when you're starting out, it couldn't be more personal.
Yeah, a little bit of a different situation. I actually joined the company. I was hired to be the CEO by a group of investors who was a very sizable family office. So we had the luxury, I guess, of being able to start. We didn't even have a license at that point. Got the first pre-qualification license. And what was nice about it, it did allow me to go out and recruit outstanding COO, CFO, CMO, and then eventually Chief Legal Officer. So what started with people saying, we like your backgrounds, we believe you've done it before and you've operated, then had to transition, though, as we got up and running to, this is a great team. Now, okay, great, we've heard all about you. Now show us what you can do. And so as we continued to raise equity and then, of course, more debt than equity, as we tried not to get too diluted, it was more about what kind of results we could put up and how many licenses we got. We were early on in Michigan, and of course, obviously, especially again in Grand Rapids, it was pretty difficult. But I think it does change. I mean, you start banking on yourself, and hopefully your friends and family support you as well, and then you really have to show results.
Okay, great. Well, you mentioned, Anna, you did a good segue there, Leah. We were the next question I did want to ask had to do with, you mentioned debt and equity. So let's talk a little more about that. Describe the different, the myriad of different structures. I mean, we don't have to conduct a corporate finance class here by any means, but talk to the audience about the options, different ways of structuring how money might come in, and what for where the cannabis industry is now and what the risks and returns may be. And we're going to start out with Greg on this one.
Yeah, I think in general, we've done most of the forms of capital in the space, everything from debt to real estate to equipment financing to traditional sort of late stage equity, early stage equity, obviously. And it's all there. All of it is expensive. It's more expensive than traditional debt for a variety of reasons. And most of that is just because the universe of investors out there is so much smaller than a traditional business. Most institutions cannot participate. Even a lot of individuals can't participate for whatever reason, bank or employment and things like that. So right now, I think what really you have is most of the capital that's coming in is on both ends of the spectrum. So you have really, really risk-averse traditional sort of real estate lenders that are evaluating a business based on the hard asset collateral and in a worst case scenario, what's their downside, while also just trying to squeeze a little bit more yield. We call the cannabis premium. So in a non-traditional business, what their returns are, they can get more, squeezing more of that because it's cannabis. And then the other end, you have equity investors that are really thinking about long-term upside. Where is the business going to be? And not really thinking about, short-term cash flows and small returns. They're thinking about earning multiples on their money over the next 5 or 10 years. And I think that's where we're at now. And again, if we get some sort of banking reform in the next couple of years here, I think you're going to see a lot of that open up, primarily more in the earlier stage, where you're going to see more local sort of small business funding, commercial mortgages, things like that will really open up the early stage capital access.
Right. Okay, let's see. Where did I leave off? Let's start with we'll punt that one over to Vishal. Describe a little bit about risk returns You know, of course, everybody's situation is different, but what can the audience sort of learn from your experiences in using these different capital stack options, I guess is one way to put it.
Yeah. So yeah, we have also raised kind of every form. I don't think at the scale that Greg probably has, but we have done some equity, some debt, convertible notes. We've done real estate financing. And so I think it's good to kind of, inform yourselves on these various structures and kind of the attributes of each one. I would say the way I think about it is, at least for our business, the beginning when we were starting out, I think something like debt would be kind of tricky to navigate and would be concerning when you're launching operations. You don't have a sense of performance yet, and it can be incredibly risky from that point of view as an owner operator, right? And so we very much thought of it as kind of equity in the beginning, which enables true alignment with your shareholders and gives you the breathing room to launch an operation, to learn, to grow. And then, at the same time, I think the markets themselves were opening up. And so later in our life cycle, if you will, or more recently, as we have, really kind of grown quite a bit in turn on assets, it became, to the point that Leah mentioned earlier about how do we make sure we're not taking a lot of dilution, right? How do we protect that equity value for all of our shareholders? And then it was about taking on debt. But again, I think to me, and perhaps this is my former restructuring days, but I'm always scared to take on debt before a business is ready to take on debt, right? You need to know that you can service your interest payments. You need to know that the sizing of your debt makes sense. And I think in this industry, in particular, sizing is something that that's all over the map. Right, there's been kind of ups and downs when capital is available, and so you can have massive equity raises sometimes before they actually make sense to take that much money. You can have large debt raises, then it can tighten up, and so I would encourage people to really think about what are the needs of their actual business and take that capital accordingly until they're kind of further along, and then if they have some some larger kind of initiatives they want to pursue, then okay, but I do think you want to try to size these things for what you actually plan to use, because taking on more debt than you need is just a burden on the business. Taking on more equity than you need is probably more dilution than you really have to deal with, right? So to me, that
ultimately it all comes down to what you think you and your venture can afford, based on your projections, reasonably sensitized projections. Absolutely. Yep.
Yeah, the only thing I would add is, we progression, Michelle just talked about also, but the best was when we got cash flow positive. I mean, that was by far such an amazing feeling for us, I think, just because of the fact, maybe because we chose not to make other huge investments or things we could have done, but because we then, got to that point to be able to support the business on that basis, I think was really wonderful. So I think it's important not to take on more than you need, and really, watch what you're doing to make sure that you've got a business that's going to be able to thrive without taking on a whole lot more of dilution or the risk of debt.
Absolutely. So, I mean, one thing that I think we touched on earlier when Greg was talking was really that, at least at this point, and I promise we're going to get to the regulation question towards the end, but at least at this point, there really are relatively few options for people. I mean, in my case, I just do debt placement. I probably know most of the project finance funds out there and the REITs and that kind of thing. And there really just aren't that many that are set up for cannabis businesses, let alone once you drill down into a particular, say, geographic area or typical type. And beyond friend and family, there really aren't all that many purveyors of equity until you get to, a stage when maybe you can think about doing a larger placement or an IPO, if we're able to do that in this country anyway. So with that in mind, I'm going to start with Lee on this. I mean, given you have so many different projects and companies who are vying for a relatively small amount of funding or capital, how do you differentiate yourself?
You know, it's a really important question, and I think it's true in any industry. You know, in the beginning in cannabis, anybody who's got a product that's high THC and looks pretty good is probably going to sell. But long term, that's not going to necessarily be the case. So I think really from the beginning, you have to think about, and we've talked a lot about brands over the last several discussions, and of course I'm a marketer, so I'm going to talk about brands. I think it's important to build a brand because that's your long-term way to differentiate it. And of course, it's not just the brand, but it's what does the brand stand for and how is that differentiated? Which consumer group are you going after? You know, which price points are you going after? Which product mix are you going after, et cetera? So I think number one is you have to define what your differentiation is. And that's really important for people to believe in you. And then the next thing I think that really made a difference for Flourish was that we had operators. We had people who had been out in the market and had shown that they could run companies. We knew how to run P&Ls. We knew how to understand balance sheets, cash flow, et cetera. And so I think what really differentiated us as people started to invest in us was that they believed, based on our backgrounds, and then of course, as I said later on, hopefully we showed them based on results, that we could actually run a company successfully. And while I did not have a cannabis background, I was, I guess, smart enough to be quiet and listen to the people who understood it, but I did understand operations. So the combination of operating experience as well as setting up a brand that could really differentiate you long term was what I think set us apart with the people that we went out to raise money with.
Okay. Greg, how about you? What's your opinion on this?
Yeah, I do. I think it's really just understanding what the value prop is for the business. Is it, you know, limited license state? Is it are you just have captive demand? Do you think about, you know, what the market opportunity is, or to his point, do you focus on more on the team and what your competitive advantage is from a product perspective? So.
Right. Okay. Great. Vishal?
Yeah, I would say I think that's an important point that if you haven't raised capital in this industry before, you may not realize, but the type of capital, the access to capital, the way you position yourself will be entirely different depending on the regulatory structure of the state that you're operating in, right? So if you are in an open license environment, that type of market will inherently be or become more competitive and will require more of a differentiation on product, team, brand, the type of long-term attributes that are important in any competitive market, right? If you are in a more limited license environment, oftentimes I think the capital raising is quite different then, right? Because you are able to demonstrate there is value to this license you have that is scarce in nature due to the way it's regulated, and thus you'll have some amount of success kind of regardless, right? And I don't mean that to say that the team doesn't matter then or the operations don't matter. That's not my point, but it takes on a differing level of importance, and the skills can be different, right? If you're operating in a limited license environment, it may be less important if you are the best operator versus whether you are really good at writing licensing applications and securing sites that can become approved and understand how to navigate complex zoning laws, right? If you're in a market where it's much more open, it's going to be all about, well, okay, anyone can do that part. Now, how do you actually compete, right? And so,
right. I'm not using,
I think
that's important, right?
Yeah. Right. Sorry, please go ahead.
No. I'm. Please continue. I was just saying the brand is always important, but certainly the freer the marketplace, the more that I think differentiates you.
Yep. Yeah, I mean, I was just saying, so yeah, I think that Craig makes an important point there, which is that understanding the implications of the regulatory framework for whatever market you are in will directly kind of impact how you talk to investors.
Right. So I have a question from the audience.
And that market could be not necessarily the state.
Right. Well, isn't it right now? It basically is a state market, right? But I mean, a lot of the MSOs and certainly smaller companies too are targeting. And again, I promised to get to the deregulation question. targeting their brands to be able to have more of a national footprint, which is very forward thinking, and I think is should be something that's taken into consideration for sure. I do have a question before we go to our last question that I keep building up to. This is from Michael Norton. He is asking, this goes back to our previous question, I believe, about getting as you're deciding between which is the best debt or equity, how about getting a third party solvency opinion? I don't know if anyone I'm going to chime in just before we go any further, at least in my experience, and I am definitely more on the debt side. That really hasn't been really necessary for certainly selling your deal. I think that goes to whether or not, whether or not you need a third party or whether or not you feel in-house is you're capable of absolutely figuring out your downsized if you have debt. Most debt that I work with is secured debt. So certainly from the lender perspective, they're looking at what the value of the collateral might be, right? I don't know if that makes a lot of sense, but that's my experience. I don't know what your experience is in terms of working with third-party solvency opinions, and I'll let anybody else chime in on those.
I was just disagree with what you're saying, Judy. We did not work with a third party, and it was definitely our capital infrastructure that was the value, and there was ratios and things like that came into play.
Okay.
Yeah, I would I guess third that was not something that ever came up in our discussions, and it was much more based on strength of the business and the collateral and kind of the diligence on those items.
Vishal, that was Greg, right? So Vishal, any opinion on this?
That was me who chimed in, Judy.
Oh, sorry, I can see your brains are frozen, so I can't see that you're speaking.
No problem. No problem.
Yeah. So
yeah,
Greg,
I think the value in those opinions may rely on. Yeah, the value of those opinions may rely on the groups doing it, and it's still the cannabis space, so you really don't have the access to the big name firms or anything that would really carry weight. So I don't know how valuable they are, especially at the early stages.
Sure, I do think that the value might be if you have an expansive cap table, for example, where there are a number of different people in a voting interest who you need to. They would find value in having a third party, disinterested party, do a little analysis to make sure that there's no management bias or whatever. That's often why consultants I heard anyway, and then I think maybe it might have some value. So I'm going to move on to we have about, I think, 12 minutes left or so, if I am doing my math correctly. So I promise now I'm asking the question that everybody's been wanting to chime in on, which is what are your opinions? What are your thoughts on where federal deschedulization, normalization of banking laws, where is this going to lead fundraising in the near-term future? I mean, we've had obviously a change in the administration. My opinion is it's probably more likely than it was in the past, but I think it still is. There's still going to be barriers, but I would love to hear everybody else's opinion. So let's start with Greg on this one.
Yeah, absolutely. I think, it certainly is more likely to happen than it was at the beginning of January. But again, 51 votes is not 60. And so I still think it'll be quite a while, a year or two before you get any significant movement. You might get some additional kind of cleanup stuff, reintroduction of something like a Cole memo or some safe harbor language. But I think you're seeing, and everybody's seeing it, the equity markets are kind of taking off in anticipation of that. You're seeing an opportunity to get into the space before the big institutions can really get in. And so I think you'll continue to see the equity markets take off and continue to remain elevated, but it's still going to be the same environment for traditional debt or commercial sort of real estate perspectives for at least another year or two.
Okay, Vishal?
Yeah, I would tend to agree. We focus on it, I think, the same way that Greg just said, which is that it's really a focus on the Senate. And I think it's unlikely that anything is done through executive action. And I think in the Senate, it would still be tricky to actually get something legislatively approved with kind of the current setup. I think some incremental reform may be possible. So some type of banking relief that could open up a little bit of access to capital. We would love to see 280E amendments or any kind of, movement in that direction. That would be, I think, incredibly advantageous to the entire industry, which is obviously kind of penalized right now from a taxing standpoint. So that would be helpful. I do think along the way, whatever these incremental steps may be, you will see increased flows of capital as a result, right? So if there were banking reform, it may open up, even small banking, small lending, kind of small banking opportunities. It may actually open up bank debt, right? I mean, interest rates right now in this industry are much higher than any traditional, fairly substantially asset-based kind of industry. And I think that type of access to capital would continue if there were banking reform and would improve. And then, like Greg said, I think you're already seeing I'll couch as some euphoria in the capital markets right now with the equities right now, and I think there's a lot of enthusiasm. So, if that's happening right now before anything has even become concrete, it's easy to imagine that there would be substantial inflows when it does. So, I think you're going to have a little bit of a roller coaster between here and there, meaning the capital markets will open and they'll tighten and they'll loosen, and people will kind of ride this wave. But generally speaking, momentum is absolutely behind the industry, and you should continue to see, I think, improving access to capital, whatever that means on whatever timeline.
Great. Leah?
Yeah, I totally agree with everything everyone has said. I think safe banking maybe will pass, and that would be great. I think that'll allow people that have not been able to figure out how to do a bank account, which fortunately we had, to have that kind of access. But I think we're just going to continue to probably compete with the same types of companies and industries that have been competing for the same people's money. I think we'll get stronger and stronger. I think as our operating functions get better, as we watch our cost of goods so that we can put more back into the business, be it in operations or marketing, those are going to be the companies that win. I think like any other market, it's going to be a very competitive market for money, and we just have to show that we are able to give people, there's a lot more risk, but returns that they can expect. And I think we'll be continuing to compete with other industries that have, similar risk profiles.
Right. Those are great comments. I'm going to weigh in on my opinion now. I actually do think they have a substantial, at least banking changes in banking themselves before the end of the year on a legislative basis. But the devil is always in the details. And having been, I didn't go into my background, but before I started this business, I was a 40-year commercial banker at large commercial banks such as Bank of America and some regional banks as well. And so I kind of consider myself almost expert knowledge on bank compliance and internal politics, if you will. And I do think that even so, what I tell people is just because banks are going to be allowed to lend money doesn't mean they will lend money. And there are a lot of reasons, aside from just being cannabis, that they may side away from the industry for a while. Everything from a perception of money laundering to the fact that this is just a new and unproven industry. These companies are usually early stage, and banks typically don't like to lend money to early stage businesses. So I'm not saying it's not going to get there, but I don't think it's a turn on the light bulb and everything happens all of a sudden kind of thing. Certainly, I think the normalization of being able to conduct business through a bank and having a regular commercial checking account and regular products where you can actually function as a business, those are certainly prone to change before lending through banks are. Having said all that, I think that the perception that there is going to be more competition forthcoming could cause even the funding sources that I work with and some other ones to reassess what they are charging for their loans. So we might see a little softening in pricing, maybe towards the end of the year, possibly. We'll have to see. So that's my big 2 cents on the whole subject matter. So we just have a few minutes left. I guess at this point, I'd like to, just thank everyone. Thank everyone so much for taking part in all of this. This has been a great panel. It's been a great day. Please, all of you that are listening, please, support our sponsors if you can. Those are Michael Best and Friedrichs, MGO LLP, Verta Innovations, Cannabis Facility Construction, Illinois Equity Staffing, and of course my firm Seed to Sale Funding. A little plug for my company. You can certainly click through on any of the things that Grown in as established, but my website is seedtosalefunding.com. I recently redid my website it can actually provides, I think, a lot of value for anybody who's looking for debt financing. So I'd encourage all of you to certainly contact me directly or through that website. And that's my little plug for my own business at this point. So thank you so much for watching. I think we're about done. Eric, there's 2 Erics involved here. If there's anything else you think I should be adding, send me a quick note. Otherwise, I think we're in good shape. Good? Everybody good?
Thank you, Judy.
Great.
Thank you very much for having us.
Appreciate the time.
Thank you. Bye-bye.
Thank you,
Bye.
everyone.